Earlier this month, through all the hype of the Bitcoin ETF, we gave you the first warning that it was likely Bitcoin was going through a distribution pattern. A distribution pattern means that crypto insiders, Bitcoin insiders, investors are manipulating the market to sell it off. And so far, we've seen the exact playbook play out. So what happens next? What do we have to look out for? Where is this thing going to end? And then what happens next? And how can we be so sure that what happens next actually is positive for the prices of Bitcoin and crypto? Let's dive into that in today's video. It's your home of macro cycle analysis, studying the past to forecast the future. We cover Bitcoin, cryptos, the stock markets, and real estate. We need the entire package put together so that we can understand what happens next. None of these markets move independently. They all work together. And if we start from the biggest of them all, then we can get an idea of what happens next. And the biggest of them all is the real estate cycle. But we're here because Bitcoin is down yet again. Now we want to understand where Bitcoin has come from, where is it going, and potentially what happens next. At the end of the day, we do not know what happens on the black side. We are just detectives in the market, and hopefully we can use these tools to our best advantage to get us on the right side. The right side of the market is what depends upon making those profits. Now, if you're new here, hit the subscribe button and like the content up. There is a lot to cover in these markets, but it is simple if you follow the process. If you are returning and you've seen how this market has played out, while 90% of people have said the exact opposite, I thank you guys very much. Hit the like button. That's all I ask of you guys. All right, let's have a look where we sit right now, down all the way here at $41,000 for Bitcoin. Now, we put the first warning out about the distribution schematic, our Wyckoff distribution schematic. And it's really important that we follow key steps, as we have done looking at the phases of the cycle and all of the different pieces of the puzzle. And we go through this in detail to understand how to apply the Wyckoff schematic, because it's all too often that people just pick up a schematic and then lay it across anything, which you've probably seen many, many times before. All sorts of traders everywhere and anywhere with no experience or plenty of experience love to pull fractals from markets and then just apply them time and time again. This leads most people astray and typically leads to a lot of losses. Do not do this. This is the biggest lie that they give to you when it comes to fractals and technical analysis. This sort of thing is for fun, and if you want to get the hopium or the doomsday looking at any of these sort of things, if you want to flip them around, then you can enjoy this for the entertainment. But we're here to actually make money from the market and not look at the BS that goes on out there. So let's break it down from that first warning. We had an upthrust. That's what the UT is here. And this is potentially phase B, this whole area with these lines going down. And this is how we were able to put it together, even though it looked like price was going to skyrocket, give us that God candle and that huge pump to 50, 100, 200,000, whatever was the stupid call of the day, some sort of blow off top going into the next stages after the Bitcoin ETF. Now, while some of that stuff can still be on the cards, I think it's important to have a look at where we sit and not to get caught up in the hype of that time. So we had the upthrust, and it was right around this point here that we looked at Bitcoin potentially going through distribution schematic because of how the weakness was starting to form in the market. Now, some other people might be using an RSI, a relative strength indicator, which is also okay, but I prefer to use the distribution because it lays out what the market sentiment and how to apply the market sentiment across objective rules in the market. So the next thing that followed that, which was just a few hours later, fortunately enough so that we could see it happen in real time, was the sign of weakness. So the market just collapsing to fresh lows after that move up out of the highs of the buying climax. So the BC back here, the buying climax came in, secondary test, sign of weakness, up thrust, another up thrust, another up thrust. So you can see the strength of this move, which is going to be important in just a moment as well, because sometimes the strength of the move may mean that the distribution and the crash to the downside might not be as severe as what the bears will think. So we need to just keep an open mind here. We are not perma bulls or perma bears. We need to push and pull with the market because we are detectives for the black side of the chart. The right-hand side, we don't know what's going on. We just need to see what the market is trying to tell us. And it told us sign of weakness, but there could be another upthrust. Like you can see here with the schematic. This one here is schematic 1. There are multiple schematics. So upthrust after distribution. That's what the AD is for here. So there was the distribution. There was the upthrust after the distribution. And then to almost guarantee that this is the distribution schematic, because we're not there yet, but I'll show you why. We got that sign of weakness very, very quickly afterwards. This upthrust after distribution, or two of these, came on the 10th and on the 11th, which is basically at the exact time of the ETF news. So the market sold off after that point, and so far we've had one of the biggest sell-offs of BTC in this entire move. We had 17.22% from the top to the current low, and basically that beats any other pullback that it's had since the September bottom, which is basically the 17-week move from this cycle low back in September, when everyone else was fearful that the market was going to collapse to $20,000. So we've had the sign of weakness. Now, the next thing that typically happens is a last point of supply. You can see the market likes to bounce back, and what has it done? It's almost done the exact same thing here. We've had a last point of supply. Granted, we have thought that maybe this last point of supply could have reached slightly higher prices, because the 50% is back here at 45,300. That may still occur because we're just having a bit of a holdout here now at 40,600. So maybe the market has some time here to come back and test the 50% level, get back to $43,000 or $44,000 to get all those hopefuls back in the game, tell us the ETF is all back on and that the big players aren't selling as much as they are, and the market's going to continue on. So keep an eye out for that. That is the next thing. This is what happens next. So the next part is we have multiple options, but I think most of these options are now going to play out to be to the weakness, but we've got to keep a level head here. So 50% to the upside, 44,800, call it 45 grand for a round number there. That's a potential, but right now we don't even have any sort of sign of a push to the upside. The smaller 50% level, so the first target, if this is in fact the low here at 40,600, the short-term low, then we'd be looking to $42,000. So only after that time, if Bitcoin can get back above 42,000, can we expect it to test 43.5 and 45,000, which were the next targets to the upside, the top here, and then the 50% level. Now, I might be deadly accurate at calling the market, but I still need to learn how to drink my water, so don't mind the drips on the shirt right now. Let's carry on. Looking at phase D of the market. Phase D arrives after the test of phase C, shows us the last gasps of demand. Would you agree that they were potentially the last gasps of demand at the ETF hype, which could lead to a pullback, but at a higher low? Remember, in the intro, we looked at or talked about the possibility that we would get a pullback, but how do we know that there is further upside to come and that this isn't the end? This is the end of Bitcoin, and Bitcoin has had its day, it's had its ETF announcement, and that it is just ready to fall out of bed and collapse past all of the previous support. How do we know that for sure? I'm sure that is a big question on many people's minds, especially the further down Bitcoin decides to come and break down past these significant levels. So how do we know that? Let's look at that in just a moment. But essentially, phase D, last gasp. Okay, during phase D, price travels to or through trading support. So there is the trading range support there. Sign of weakness, phase B. We've also just traveled through the other trading range. These are the levels that I've picked out on the chart based on previous support. And once we break those down, you can see that the market will have some struggles here if it is going to get back above those levels. And when these levels break, this is a big pro tip if you want to get really good with your trading. When these levels break, you typically see and hear and feel, which is the subjectivity, all of the fear come back into the market. Maybe not all of it, but a good amount of it. And on Twitter, that's exactly what we heard over the last 24 hours. There was a lot of people freaking out about this move to the downside, and a lot of bears coming back to tell us that this is the breakdown. Okay, so typically those levels, when they break down, you'll see more and more excitement or fear at very key levels, and that gives you the understanding and the confidence that they can be key levels. So this is how I marry the sentiment, which is a little more subjective, to the objectivity, which of course is the chart that gives me that confirming signal for my own analysis. Now that you've grasped that, let's move on with the evidence that supply is clearly dominant, increases either with a clear break of support or with a decline below the midpoint of the trading range after the upthrust. So there was a mouthful there, but we've basically broken through one of the trading ranges. I would love to see this next trading range break. So that's the 40,000 level, 40,100. And that is the level that we can confirm, or I would confirm, that phase D is in and we're moving into phase E. That's the level that I want to see, $40,100. And for a psychological level, $40,000. Throw that on your cards there. So that's where we currently sit right now, looking at the phase D, and the midpoint of that, well, that was at 44,000 when the market broke down. So there's the first signal. In the Wyckoff method here, it says that you could say that this is the phase D, but I'd like to see just that extra bit of confirmation there. So what do we look for next? What happens next? Phase E depicts the unfolding of the downtrend. The stock leaves, well, in this case, Bitcoin, leaves the trading range and supply is in control. So there's more people selling, even though they've told us that they're all buying because of the anticipation of the ETF announcement on that day. But in fact, they're basically selling at this point. The stock leaves the trading range and supply is in control. Once trading range support is broken on a major sign of weakness, your SOW, this breakdown is often tested with a rally that fails at or near support. So what does that actually look like? This is what happens next. This is what we have to be prepared for to understand how these cycles work. Well, if this is the first breakdown, maybe we will see a rally and a test back to the underside. So basically, if you throw on your TIA Gann swing indicator, if you want to learn how to use this, go to the top of the video description and there is a 7-day free trial there for the Gann swing indicator. Absolutely phenomenal tool to help with your trading and investing. Know where to take profits, put stop losses, what's happening next in the market on all different time frames, all different assets, crypto, stocks, you name it. Okay, so if we were to get that markets to run up to roughly around 41.5 and potentially get rejected there, or as we've pointed out, a few of these other levels. Nonetheless, provided it remains underneath 45K, it's pretty much weak on the 4 hour here. So keep that in mind as well. So that's what that's what it would look like, and then the breakdown would occur from that point. Maybe it breaks down from this next low and then attempts it on the underside and then continues to the downside until it reaches the next levels of support and resistance, which we've talked about many times before, being the mid to high 30s. First level is roughly around that 38. The halfway point is about 34,500, which also lines up with basically these lows here. So the halfway point of the all-time high being 69,000, half that is 34.5. Lots of numbers, but keep those in mind. This is how it looks like it's playing out. Last point of supply, and that's what these next levels would all look like. On the way down, you'd be selling short, last point of supply. Down, maybe selling short, last point of supply, but don't leave it too long, because once it reaches these next levels, that's when it gets more risky to be shorting the market. It was much less risky at the top when everyone was telling us to buy, to short and sell, than it was to buy. More risky to buy at the top, less risky to sell at the top. Funny that. Traders who have taken short positions can trail their stops as prices decline. That's specifically what I was talking about with this TIA Gann swing indicator. So that's where it tells you where to put those stops. If you want to learn, link is in the top of the video description. You can take that and make it your own in your own trading plans. So that leaves us at the end of phase D and then into phase E. So what happens from that point, and how do we know that this isn't just another sell-off to another sell-off to another sell-off to 20,000, 10,000, and so on? Well, these are only just small price cycles. We're only on the 4 hour chart, looking at the price cycle of the markup, then getting overbought, then the markdown, and then potentially another reaccumulation area. That's the first thing, nice and simple. Now, in terms of the macro, real estate cycle, maybe you've heard me talk about this before, maybe you haven't. Looks like we're still on track into a top later mid this decade. So yeah, a couple of years time or so. We're going to continue to follow up on the chart, so make sure you do hit that subscribe button. We're roughly around in this midpoint here. Don't try and make sense of all of this if it's the first time you're seeing it right now. It's going to make more sense as the cycle progresses. But essentially in the macro, we still have a fair bit more time to go. For the S&P 500, there's still more time to go as well to the upside. So provided we still see more and more money and risk flowing into the market, it's likely that we'll also see more of that flow into Bitcoin and cryptos. This is the big one here that I really enjoy looking at. Looking at the Bitcoin accumulation in relation to the S&P 500. And so far, it's worked out to be pretty well on track for each of the cycles. And that's how I came up with it looking back at previous cycles. In the Bitcoin bull markets, the S&P is basically just a straight up line. There's barely any pullbacks in the S&P while Bitcoin's going up, which makes sense because there's a lot of risk happening and people are fearful of missing out. The FOMO kicks in and it just keeps going up and up and up. But in the accumulation stage, this is where Bitcoin is accumulating. So the timeframes for the Bitcoin accumulation, so that we have defined rules, are the low of the market to when Bitcoin breaks out into a new all-time high. And we know that Bitcoin broke out into a new all-time high in November 2020. There is your marker there, which kicks into gear for the bull market straight up from there. That also coincided with the election as well, the actual month of the election. I suspect something similar will happen this time around. Maybe it happens, maybe Bitcoin breaks into a new all-time high a month or two sooner. But you've heard me talk about that before. So where do we sit in this accumulation? Well, let's move our little cursor over here. We're about 9 months to go, roughly speaking, which lined up with the video yesterday, the previous day here, looking at when Bitcoin will potentially break into a new all-time high. So that was about 8 or so months away, around that after that halving, and the market starts to climb from that point, roughly 22 months from that low. So let's just go back to each of these cycles here, the Bitcoin stage. S&P 500 breaks into a new all-time high. See, this is where this white arrow is, and then pulls back. There's another one there. Then you had that significant pullback, which was the COVID collapse. So without COVID, there's one, and there's 2 breaks into new all-time highs, and then the market goes crazy. Previous cycle, there is a break into a new all-time high from the bear market of Bitcoin. There is your pullback. There is your next break. There is your next pullback to the tops. And guess what? That was also an election month, this little green month here, which is pretty significant at the time. Trump elected November 2016, market straight up into 2017. Cycle before that, there's one break into fresh highs because there was your previous all-time high, so fresh highs, pull back, another break into fresh highs, another pullback, and then bull market. Bitcoin goes crazy along with the rest of the market. So where do we sit now? Well, we're about to test a new all-time high. Do we get that pullback in the first half of the year, which is what we've been saying, first half of 2024, potentially a little more volatile than some might anticipate with how well the market's been running for the last couple of months. So maybe we get that test and a pullback, and then another test and a pullback, and that leads us into the second half of the year, which will potentially be a little easier to trade, a little more straight up around that election time. Now, what does that look like on the Bitcoin chart? What happens next? And all of this sort of thing explained. Well, we've also got the 50% level to look at, where that price could come in. There's 37, so we've talked about mid to high 30s, and 37 is basically dead in the middle of that. It's also dead in the middle of the previous zone before the market decided to have its last run. And we are now 17 weeks up into that peak. And what we've done in the past is have a 9-week correction, another 9-week correction, 3-week correction here. So if we're looking anywhere from roughly 3 to 9 weeks, that could set us out to either next week as a potential low, quick flash crash to that low, and then bumbling around until we get back to the highs with the halvening also coming into play in the next month or two. Or if we look around 9 weeks out, 9 weeks takes us to about mid-March, which is also another fantastic time for a low, as that would be a 12-month repeat. You can see we did 12 months ago, we had the fearful banking crisis. What do we know from the banking crisis? Well, markets went straight up from that point. Doesn't mean every time we get a banking crisis, markets will go straight up, but that is what happened back there. And that's precisely when we were looking at buying Bitcoin again because of the fear that came in, yet the market was showing opposite signs. It was showing signs of strength, even though the news was telling us things were going to get a lot worse. Now, on top of that, this is for another video coming up. So make sure you hit that like and subscribe button, looking at how these markets correct to that 50% level. What happens next after these times in history where we potentially get these tops, like what's forming now? Look at how the market's breaking down on your swing chart, potentially going to break that low. And then testing of the 50%. So I've got another massive video for you guys coming up to have a look at how these markets respond to this 50% level on a more macro time frame, looking at the weekly here and the Gann swing indicator. So if you don't have that, go and check out the 7-day free trial. Link is in the top of the video description. That is going to help identify some of these lows and areas to enter and exit the market. So big things coming up with the 50% level and those weekly closes. Don't go anywhere. Lots to come. Thanks again for your time and support on the channel. I'll see you back here at the next video. Till then, take care and peace out. Why are there balloons?